Hey, it's Michael Saul, but everybody calls me Tiny, and this video is okay, so the low is in, right? Plus a stock to watch this week. This is stock market analysis for the week of April 30th, 2018. Sell in May and go away time. Two quick announcements. If you would like to receive intra-week updates from me, go to www.attackthemarkets.com, put in your first name, your best email address, then follow the directions to confirm your email, and you will be on the list and get intra-week updates from me. I'm basically emailing every day or like 3 to 4 times a week. A couple of weeks in a row there I had every day, but sometimes it's just not much to say from day to day, so there's no use in emailing. All right. Second, if you would like to interact intraday on our Facebook group, you can go to www.facebook.com/groups/attackthemarkets, answer 3 easy questions, and you will be part of that group, post some charts, get a little dialogue going. Right now, it's kind of off to a slow start, about 80 people in there, but we'd like to grow it from there. It is absolutely free to join. All right, let's take a look at the market. So, 2 ways that this could go was the title of my video from, a few weeks ago. And the 2 ways were either we're going to roll over and take out the February lows, or we're going to put in a higher low and complete this triangle looking thing here. Now, you can see here, we didn't quite get down to where this line was, but we did hold the 62% retracement of this last swing. We did have a hammer on Wednesday. We did get confirmation of that hammer on Thursday. And Friday, we didn't give it all back. So we held the 200-day. We held the 62% retracement. Does this mean the low is in? I would like to say yes, but I do not have the over-exuberant confidence that I should here. And no, I have not become a bear or anything like that. It's just the market is, and maybe it's early since the low came in, but the market has not offset this nasty day from last Tuesday. So, and this is basically S&P, where we'll look at all the majors like we do. But until we do, I'm nervous that this could just be corrective. And if we go back down again, I'm not going to auto become a bear because we do have this potential hold down here. And even if we do go and we break through the February lows, I'm still looking for a zone of support coming up here. But I'm not overly confident right here, right now. However, I do think if I have to, in my opinion, it's better than a coin flip, just not much better. And just so you know, in case you're new to watching my video, I'm always looking at both sides here. I very rarely get completely overly committed unless it's a continuation pattern, which this is not, or a follow-through day, which this is not. Okay, those are the 2 times I really only, the 2 times that I get biased. I'm not biased here, all right? I haven't, and I know, what's the difference between a bias and opinion? Well, the way I describe it is a bias only looks one way. Like, for example, me, I do not like nuts in my dinner, okay, which is a pretty provocative statement. But in other words, I don't like Kung Pao chicken with peanuts. I don't eat that crap anymore anyway, but if I did, I would get the Kung Pao without the peanuts. I don't like chicken and cashews. I don't like that stuff. I don't like slivered almonds on top of, whatever it is, salmon almondine. I don't like that. That's a bias. Okay, it's not an opinion. All right, my opinion is I really don't like country music, but you know what? I'll listen to it sometimes. That's an opinion. So bias is I don't like chicken with cashews or other dishes that have nuts, or even with peanuts, which is actually a legume. All right, in case you're ever on Jeopardy and you need to answer that. So that's a bias, and I won't eat it. I'll just I won't eat it. And if it's the last thing on earth to eat, I'll have to pick around it, right? So what does this have to do with the market? Well, a bias is all right. I'm only looking one way. An opinion is, I think the odds favor this way, but I have to be ready for the other way, right? And I was taught by one of my mentors that most of the time in the market, even when you can stack the odds in your favor, you should only be about 70% committed to your direction. Now, I know some people may go, well, that's ridiculous. Well, why? You have to tell me why that's ridiculous. I don't believe it is ridiculous. I think it's smart, actually, because you don't fall in love. You don't sit there and go, okay, no, what do you mean the market's going down? Everything says it should go up here. I don't get it. And yeah, our bias is wrong too. Do flags fail occasionally? Absolutely. Do follow-through days not follow through? Absolutely. Nothing is 100%. So you always have to use proper money management and proper stop losses, but having that 70% rule of, the most I could get on an opinion is 70%, it keeps you a lot more flexible. On this, I'm probably closer to 59.3%, right? Not even, just a little under 60%, and that's a joke. That's not a real calculation. About 60% here. All right, I believe there's a good chance this low is in, but we got to get some work done. We got to offset Tuesday's candle. We got to get above these April highs, and we got to get through this line here. All right, and it may not go in a straight line. So let's see what happens. There's some news over the weekend, T-Mobile and Sprint merging. We'll see how that goes. I don't know how that gets through without getting blocked. Okay, and then North Korea is denuclearizing. I can't even say the freaking word, but North and South Korea, they're talking and everything. And so, okay, so there's a lot of things like, oh, gee, this is great, and trade war talks have gone down to a whisper, but, there are other things still being circulated as far as is inflation a concern, and I'm reading some pieces on that over the weekend as well, and that's kind of why I got the late video. But for now, let's look at the technicals. You could see it's winding up here, so let's see if we're going to get some bullish commitment here. All right, let's go through the other majors. The Dow looks similar. Here's the Russell, which held up better, which is good. Didn't get a real big follow-through off of its hammer, though. Something to watch. Here's the mid-caps. Kind of lame. You're in a mini coil there. I didn't look at the other. Oh, that's caught this one here. This is a mini coil now. So actually, the mid-caps need to be watched for release here. Pardon me. Let's look at the Russell. Yeah, Russell's in one too. How about the NASDAQ? Yeah, no, the NASDAQ had that pop and then the gap and crap on Friday. Like you look at like a Facebook, right? Can't get over that 200. A lot of people are talking about Facebook with the earnings, how much money they make. Did you see the new Facebook ad? I don't know if I watched part of the Cavalier game and I saw the Facebook ad a few times about how, you came to Facebook to make friends and this and that, and it got out of control with fake news and clickbait and now we're going back and all right, well, whatever. And it's funny because the first thing I thought is, how are they going to make money then, right? There's still going to be advertising. Yes, they are cracking down on they're banning accounts left and right, but whatever. That's their bread and butter. I think they make 90% of their income from ads. They have the biggest, as far as the big mega weights. I think Google's only at like 88%. I don't know. I saw the chart in Barron's last week, whatever it is. So Facebook makes a lot of money off the advertising, so I don't expect it to go too far, too fast, very far, very fast. Okay, away from that model. Semiconductors are still acting weak. They broke below the 200-day, but they did come back. Here's Klatenka. We talked about that one. Did get a little push off the 200-day, but fell shy of the first target. And again, you can see the spinning top up here. Here's NVIDIA on the bounce here as well. Will it test the 200-day or not? Or was this it? Was this the double bottom? Intel still acting okay, but look at this gap and crap as well. Banks. So the banks, people are saying, well, if interest rates rise, the banks could participate. Now, I don't know if the big banks like this should capitalize on it also, but there's one, if you look at the regional banking ETF, okay, they're showing good relative strength. So if interest rates are going to continue to rise, everybody's talking, I forgot to talk about that, about the yield being over 3%, and oh my goodness, it's good, it's not good, it's arbitrary, it's all confusing with that, right? So I just, you know what, let the market be what it be. It didn't lead to a huge sell-off, so don't, there's nothing, in my opinion, there's no teeth in that. There's just a lot of, as usual, minutia and rhetoric. All right, so KRE, the regional banking ETF, looks better than the BKX. All right, but let's look at some of the bigger stocks. I mean, Bank of America, I can't say this is bearish because it's still above the 200-day, but this is what I call ping pong between the 50 and the 200-day. All right, a lot of people, you try to swing this and you get chopped up and you don't know why. Well, because it's not committed yet, and this is absolutely a coil. You could even call it a triangle. I don't care what you call it. It's a wind-up. So Bank of America looks set to move. His Citigroup is, showing poor relative strength. J.P. Morgan looks similar. Here's Northern Trust. Now that's showing good relative strength. Okay, showing good relative strength. How about Wells Fargo? Wells Fargo, after the big fine, it didn't sell off. It held 50, but if it loses 50, could start. Could get a nice move down, a quick move down to 46. It doesn't sound like a lot. 4 points, big deal, right? Stocks like Alphabet and Facebook, burp that kind of move, and Apple, right? But it's a nice size move. It's still 8%. It's nothing to sneeze at. But anyway, just something to pay attention to there. How about the broker-dealer? Yeah, the broker-dealer is coiling up as well here, or triangulating up. More of a triangle. I'd like to see it hit at least 3 numbers, but it's triangling up here, right? So what you could do if you have something like TC2000, like I have, or you can go to FinViz and do it, whatever you want to do. You can open up and you can look at the stocks inside. Like you look at E-Trade is just killing it. Ameritrade is not performing that great. Schwab doing great. Looks like it wants to go to the highs. And that's if the brokers break. But look at Interactive Brokers. This is a nice pattern right here. Okay, this is a nice pattern to watch. I would be watching this week. Of course, always check for earnings. Goldman, on the other hand, which is our go-to broker-dealer stock, look at this. Broke through the 200-day and had an inside and not an inside. So it didn't have 2 inside days, but it had one and then a narrow range-like candle. So what you want to do here is you want to coil, you want to draw the lines around this, and then you want to look for a release one way or the other out of here. All right, but to me, this is impulsive because it broke the 200-day. So I would look to see if it continues down, but that's me. Here's Morgan. Watch the 200-day moving average as well. Biotechs, because we look at them every week, or almost every week. Possible high or low there. Biogen, wow, what a nice rip off of 250. Nice little 10+% move. So I want to see what it does here, up at the 280 move, 280 number, sorry. Here's Gilead, which came out the bottom of this consolidation, and then it started to bounce. All right, we already looked at Facebook. Let's look at the Amazon. So Jeff Bezos is the richest man in the world again. I think he didn't lose it, but he's richer. I think they said 10 billion he added when it was up here. I don't know. Anyway, it was a gap and crappy kind of move. I'm not looking to short Amazon, but it's just, we're seeing this a lot where it's popping up and then coming right back down, right? Because everybody who was long it is like, whee, 10%, let's get out. And, I'm not really 10%, but whatever it is. 8%, 9%, whatever it is. And that's what happens. Right? There's no one left to buy if everybody's buying ahead of earnings. All right, Apple. Yeah, Apple's still not looking that great. Yeah, I'm not really a huge fan here. I don't have a sell signal, but it's really sloppy. Here's the Alphabet. So the Alphabet's sitting right on its 200-day moving average. Again, if we see some weakness, and some of these stocks like Goldman and like Google, or Alphabet, sorry, I don't want to insult you by calling you Google still. If this, if the market gets soft, these are the stocks you want to watch for potential short side opportunity here. All right. How about Caterpillar? So Caterpillar, wow, they had, I think they had record earnings, or that was a huge number, but they made the cardinal mistake, and they said, yeah, that's a high watermark for the year. They basically said, yeah, we're not going to do this again. And that was the reason behind, they claimed behind the sell-off on Tuesday. But it's coiling, and this is in a range, so it's tough to call this a bear flag. But, if this continues down, watch for a quick test of the 200-day moving average. John Deere in sympathy, but John Deere, and I'm not completely protected. How dare me? John Deere actually broke through the 200-day, so you want to watch that to see if that gets some continuation as well. Gold. Yeah, everybody's rah-rahing on gold, but nah, it's just in a consolidation here. Watch the 200-day moving average. Here's the GDX, looking a little better, showing a little bit of relative strength relative to gold. But again, my friend Mike Swanson says people don't get interested in gold miners until it's over 24. Here's oil. Again, I talk about this all the time. $80 price target, $80 price target, $100 price target. It is coiled up here, the USO, and it looks like it could release to the upside. So we want to watch that. And then, of course, you got bonds. So bonds, a relief after it broke through the 78.6. This break suggests that we go to at least the 2018 lows and probably the lows from back in 17. So this may be a little corrective bounce, but look at this bounce in the TLT. Boom, boom, okay? So let's recap. Yeah, we could have the low in, but the bulls have their work to do. Got to offset the Tuesday candle. Then we got to head to this trend line. We got to head to April highs, and we got to trend to the trend line here. We are going into the seasonal worst 6-month period, right? The sell in May and go away. That doesn't mean May 1st everybody starts selling, but it does mean, look, I don't think you can time the market perfectly using seasonals, but it's a good background indicator. A lot of people will be talking about it. If there's any weakness this coming week, there's a sell in May tendency. Everybody will be talking about it, all the financial news channels and all that stuff. So just pay attention to it. I'm not fully committed here that this is the low, but I'm leaning more towards it than not. Again, though, it's still, tough to be all, I'm saying a lot too, but anyway, tough to be, all signs point, again, all signs point to higher here, right? I think it may even want to wiggle back and forth to really coil up. I like to call it a nice ripe zit where you just touch it and it goes, boom. But again, maybe that boom is to the downside. All right, stock this week to watch is Amber Road. Amber Road had a triangle, had a coil actually, broke down to the downside out of it, but see here it's in a consolidation pattern. If it can lift, see if it goes back to these highs. Now, this is a great stock, and this is why I went on my little bias versus opinion rant, because to me, okay, I don't know where I was when I got the phone call. So this, I think I was talking about how this goes back to what I was talking about earlier with bias and opinion. So this kind of move, okay, the big thrust up, puts this in more of a continuation pattern than just a consolidation pattern. Overall, it's in a range, so it's tough, but this one impulse here would make me think, hey, this is a continuation pattern. I'm looking for it to go higher. So I would be biased here, and I would only be looking for this to break to the upside. Now, in this case, it broke to the downside, which didn't cost anything, right? I didn't see this when it was setting up. I only kind of ran across this this week when I was this weekend when I was looking at stocks. But anyway, if I had seen this, I would be biased. I would only be looking for upside continuation. Now, like I said, I wouldn't have taken it anyway because it broke down. But I wouldn't have said, oh, it can go either way from here. I would have probably convinced myself only look for the long side. Anyway, that's just explaining the difference between bias and opinion. With this pattern here, it's more of an opinion, right? It's above the 200-day. If it breaks out, it'll be over the 50-day as well. And if it could break and get initiative buying behind it, could go up and try to test this high up here at 1029. And start getting more into this retrace. Okay, so Amber Road Inc., AMBR. Any questions? Tiny@attackthemarkets.com. Don't forget to join the Facebook group, facebook.com/groups/attack the markets, and join the intra-week update list at www.attackthemarkets.com. Have a great trading week, and I will talk to you soon.